Today's episode is brought to you by Stream by AlphaSense, an expert interview transcript library that integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Start your free trial at www.streamrg.co/PMC. That's STREAMRG.co/PMC. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. Do me a quick favor. If you like what you hear, Planet MicroCap, please take 2 seconds and give us 5 stars on Spotify or Apple. This helps with the search engine so that more folks can also discover and engage with all things microcap stocks. We are now 1 month away from our next event, the Planet MicroCap Showcase, taking place in Las Vegas at the Horseshoe Hotel and Casino, formerly Bally's, on April 25 through 27, 2023. We have made a number of announcements, including just last week, we have a special keynote that's going to be happening actually with a guest I'm about to interview for the podcast, Chris Tesson and Doug Porter from Acuitas Investments, who will be giving a presentation on being a fund of fund, a microcap fund of funds. So I'm very excited about that. And as well as we keep updating our presenting company list, and it's just, we're very excited to see you all in Vegas. I know this year has been kind of a crazy year, just all around, especially with microcaps. So, this will be a really great opportunity for all of us to get together as a community, to support each other, check out some interesting ideas, hear some great presentations, some keynotes, the whole bit. So if you're interested and would like to attend complimentary, please visit www.planetmicrocapshowcase.com. See you in Vegas. Now, my guests on the show today are Josh Womack and Tom Carey from Womack Capital Partners. This episode is especially timely with our conference coming up in Las Vegas because, as we've covered here many times before, when you invest in a microcap stock, you're primarily making a bet on the jockey, aka management. That means part of your due diligence process, in my opinion, should be listening to conference calls, interviews, presentations that management has done, as well as meet with management in a one-on-one meeting and asking as many questions as you have. We've done many episodes discussing the do's and don'ts of speaking with management, but surprisingly, we've never done anything about how we should think about the information conveyed. That's where Josh and Tom enter the conversation, both of whom have an immense amount of experience meeting with management. Tom's background in particular, I think, differentiates their research process. His transition from doing investor relations full-time to being on the buy side, I think offers unique insight from someone who's been in the room with management teams discussing how they want to speak with shareholders. Thank you again for tuning in to the Planet MicroCap podcast, and please enjoy my conversation with Josh Womack and Tom Carey. Gentlemen, thank you for joining me today. How you doing?
It's great to be here. Finally.
Great. Thanks for having us, Robert.
I like the finally. It's been a couple months in the making, but listen, here we are, man. It feels good.
We pretty much all our fault. So thank you for hanging with us. We appreciate that.
No, I think there must have been one reschedule on my end. Maybe not. I don't know. We all got young kids, man. It is what it is. Like
we're here.
I feel like I reschedule like all the time, But anyways, again, thank you guys for joining me. We're gonna have a lot of fun today. Just kind of a good old fashioned microcap deep dive, just in general. But before we kind of introduce, in a sense, Womack Capital Partners, because this is your first time on the show. You guys are relatively newish, newish.
Yeah.
Before we get into all that, you guys are a long-only microcap focused fund. It's been a rough 8, 9, 10 months, how you guys doing? Let's start there, Josh.
Gosh. So honestly, when you say that, and I think a lot of clients feel the same way, like, man, how are things going? Right. I think for us, it is it's truly opportunity. Like this is why we love investing in this space. And I think investing in general, you have to kind of embrace volatility and you have to embrace times like this. But microcaps in particular tend to react or overreact more so. And so I think if you can kind of keep your emotions in check and rely on what you're convicted about and the underlying fundamentals, I think there's a lot of opportunity. And so, I mean, honestly, I wake up pretty excited about what we see and what we are seeing right now. So it's I don't want to say it's good because I know it stresses people out. So that's not good. But for us as long-term focused investors, like I think it's a really interesting environment to play where we play.
For sure. And Tom, from your perspective, because, quick background, we're going to get your full background, in a minute, but like, me and you met when you were at an IR firm, you've dealt, on that side of things with many microcap companies, have seen, a lot of ebbs and flows. Like in times like these, what are some of those conversations going on behind the scenes with microcap management teams that you've been able to parlay into now your experience at Womack Capital Partners?
Yeah, it's a good question. I mean, you took the words out of my mouth with ebb and flow. I think that's the case with microcaps in any environment, I think, especially when you look at right now. We tend to look at companies that are well positioned to kind of weather this storm. We're not going after companies that have a ton of debt or are looking to raise a bunch of capital. So, with things going on like Silicon Valley Bank and other banks having issues right now, obviously we're not, I don't think, and maybe Josh disagree, but as concerned about those sorts of issues that are coming up, because we're looking at companies that can ideally weather that storm regardless. So we really like to talk to management teams and get a good qualitative understanding for the story, probably even more than quantitatively. Like the numbers can be fine, but if we don't like the management team, then we can spend all day looking at the numbers. It's not going to make sense for us. So we've got to be able to trust management, and we like to talk to them about where they see the company going. So back to your question about kind of weathering the storm. Yeah, we just poke the bear a little bit as politely as we can to get them to start talking and see what they say to us and see what they don't say too. I think there's a lot of times a lot of value in what they don't say. So.
You bring up a really interesting topic that I wanted to kind of dig in, and now's like kind of the perfect time to talk about it, being where we are in microcaps, and it's what you want to hear from management versus them knowing what you might want to hear and just to placate you, like, oh, okay, they're saying what I wanted to hear versus like maybe something a little bit differential. How do you discern between like, all right, they're telling me what I want to hear versus like, all right, that was what I want to hear and then some, and now I feel better about the situation or otherwise. Josh, so I'll come to you first.
Gosh, I can't wait for Tom to answer this. I think Tom is really good at this, honestly. So, I mean, I think it all comes down to just talking to people, right? And it's a constant reminder that companies, especially smaller companies, they're driven by people. And people, like we're all human, we all have different fears and emotions, and we all have different goals. We all have different time frames. And I think the more just you can relate and be human to people, I think the more you can uncover and unpack with the why behind management, behind what they're doing, why they're there, what they want to do. And so I think it's just for me trying to be a normal person. Like we're not smarter than anyone else out there, right? Where there's a lot of smart people looking at these stocks, and there's a lot of smart people running these companies. And so I think it's just getting to the why behind the human beings behind the business.
Nice. Tom, same question.
Yeah. I think Josh answered it beautifully there. I think if I was going to add something, I guess a small example, I won't say what company this was, but it's a name that we've been researching, but they had put out some guidance for some, I think it was top line revenue numbers for the next few years. And we like that when a company will give guidance, but we also want to know how you got there. So this was somewhat recently, Josh. You may remember this call, but we just started asking management, how did you get at that number? And then kind of quickly realized that maybe the level of thoughtfulness that we had hoped would go into that wasn't quite there. So just I think kind of poking the bear a little bit, finding out, well, how did you get to this number quantitatively? How did you go from point A to Z to get there? So I think a lot of times, you just got to keep asking questions and get them to keep talking. And like Josh said, you get a rapport with them, and not that they're telling you anything that is material inside information, but they will start to give you a little bit of color, and you can kind of, mosaically piece everything together and form your own opinion from there.
Absolutely. Hey, Tom, coming back to you real quick, along those lines, and like I said, you had this experience where you're working intimately with microcap companies on the IR side, in conducting and helping them with some of these calls and being in some of those investor meetings. What would you say is the best question? I'm putting you on the spot with this one. What would you say was the best question that you heard an investor ask one of your clients at that time that you've been able to parlay?
I don't know where I heard this, but it's something that I use now. I'd like to take credit for it, but I think I heard it somewhere. But the question is, what's a mistake you made during your tenure as management, whether it's CEO, CFO, regardless? And if you could go back in time and change that, what would you do differently? And you'll find that a lot of management teams don't have an answer for that. And that's always a little off-putting for me, because it shows me that, and maybe they haven't had a long enough tenure there to have made a mistake. Maybe they're new, but I want to see the management team having been introspective and said, okay, we made a mistake. I should have done this. Not only acknowledging it, but owning it. And then, answering my question, what would you do differently if you could go back? But a lot of them don't have an answer, or they need to think about it for a bit. And that's fine. I know I'm putting them on the spot with that question, but the ones that have that answer prepared tells me that they've already done the work, and they're nice. They're ready to kind of move forward. The other one, the second one, I hear Josh ask this a lot, but it's, what metric should we be looking at if he asked the CEO this, for instance, what metrics would you be looking at if you were sitting in our seat? And that's always a good question to ask as well.
I like to even sometimes phrase it as if someone removed you and put you on a desert island and you could only look at 3 metrics for your business to tell you how it was doing, what 3 metrics do you need to see and why? And that tells us what they believe is most important about the business, and unpacking the why behind that. So I do think both of those, we love those questions.
I think I'm going to steal both of those for my due diligence series, because I especially love the mistake one, because I'd be so curious to see how many management teams actually truthfully answer that question. Because I can already imagine there being a few answers being like, yeah, well, this happened, but it was based on bad information that I got, versus if this was my decision. You know what I mean?
Yeah.
Oh man.
We've seen a lot of interesting answers, and some good ones too. So,
yeah, of course, yeah. No, we want to be fair to the ones that are given the good answers too. Not just the ones that were that we tell our buddies at the bar over. Always more interesting. But all right, so I want to take a step back, because, like I said, this is my first time doing an interview with you guys. I know your backgrounds from just chatting all this time and rescheduling our time to get you on the pod. But love to hear where you got your start, and how you just got into this microcap universe, what interested it, how you got interested in it, the whole bit. So, Josh, let's start with you, and then Tom, we'll come back to you.
Try to go through this fairly fast, because I'm an old man now, so I've got a lot of history here. But I got interested in investing in college, and really just loved, and at that time viewed it more as a game, and rode the biotech bubble up and rode it most of the way down. And that experience hooked me. And just made me want to know, how do people do this? How do you invest long term? Because it's not what I did. And so then just started reading everything I could. And it was your classic, Munger, Buffett, Graham, just the normal value guys. And so I started investing my own and did relatively well. And then my background was public accounting and worked for Deloitte and Touche for a period of time, and was not suited for the world of accounting. I like talking to people too much and not banging on my keyboard all day. So moved on from there and had a few stops in between, but eventually founded an investment advisory firm. And from that, I started, we manage household portfolios. From that, we had several families that say, well, Josh, is this how you invest? Do you invest in these low cost, ETFs or index funds and sprinkle in some individual companies? I would say, no, I don't do that. I invest in these tiny companies for the most part you've never heard of. They're pretty volatile. And so people would say, well, I want to do that. I want you to do that with my portfolio. And I would say, you probably don't want me to do that with your portfolio, because it's a wild ride, and it's semi-illiquid at times. And it's probably not good for you or your personality type. And so they would say, well, yeah, but what about 5% of my portfolio? Can you put a little piece of my portfolio in there? And so that's truly how the fund was born. It was born out of that demand of saying, like, oh, well, if we created a fund, we could do that. And so that's how we did it. If we rewind a little bit, about 5 years before I started the fund, I read The Small Cap Advantage by Brian Bears. And that book, it solidified in my brain all that I kind of had pieced together that I liked about small cap investing. And the book just presented it in such a way, it's so compelling. When you read that book, you're just like, oh my gosh, why is everyone not doing this? And there are structural reasons for that. And he lays it out so well. But that book really changed my trajectory on my conviction level of why this is a sustainable advantage if you're willing to look under the hood at these small companies. And so that's really what brought me to this point.
Very cool. Very cool. Tom?
Yeah, similar story to Josh in the early beginnings. My grandfather had set up a mutual fund with me as the beneficiary of that when I was a kid. So as I was kind of getting older, I was learning about that. I think when I turned 18, like a lot of people, I got, if you remember the old Scott Trade accounts, I got one of those, and kind of, wasn't really investing per se. It was more just, buying stocks and kind of seeing what happened. But went on to college, very similar as Josh, got involved in the biotech scene. Again, not really investing, just speculating. No clue what I was doing, but got to ride the roller coaster up in a very short amount of time with a couple of different biotechs, only to watch it crater way faster than it went up. So learned some valuable lessons in college doing that. Not a lot of money, but as a college student, it felt like a lot. So, but I was addicted at that point. And so got a finance degree from UT Tyler, came out of school, did some fund accounting, similar to Josh, different type of accounting, but kind of in that finance world, and did a little bit of estate planning. And then the bulk of my time after college was in investor relations, whereas, as you mentioned, Robert, and that's where you and I met. Did that for about 5.5 years, and was still investing on the side, was getting better, was learning a lot, was exposed to a lot of microcap companies, fell in love with the microcap space, was already addicted to it before that, and that just solidified it. Got some good advice from some colleagues to pursue the CFA, so I went and did that. Got the charter, and at that point, had wanted to move on and get on the buy side. So I reached out to Josh, who I had met during my investor relations days, and stayed in contact with him. And the stars aligned, and he was willing to take a chance on me and bring me on board. So I've been there for little over a year now, and we're trying to get this thing rock and roll.
Absolutely. Yeah, Josh, sorry, did you want to add something to that? Okay.
Nope.
So that, thank you guys both for that full background and, giving us the why for why you got into microcaps. I think it's very similar to some folks, but also everyone has their unique story for how, we all got caught up in this crazy, weird, wacky world that we call home in microcaps, but now speaking specifically to the fund, Womack Capital Partners, I'd love to better understand how the strategy and the structure, just how you're looking at things, how you're picking companies, how is that unique and different compared to some of your peers out there? So Josh, you want to start first?
It's a great question. And how we're different, honestly, we haven't spent a lot of time, or I haven't spent a lot of time studying other funds. So it's even hard for me to say that. I think, and we get the question a lot of how, as an investor, as an LP, how do you know which manager is going to do better? And it's just like, I don't know a good answer for that. And I think everyone we all have these like textbook answers, right? Of we're long-term focused. We look at the fundamentals, we also talk to management, all that stuff. And I think a lot of us, most of us here are capable of doing the basic blocking and tackling. And honestly, I think if you do that consistently, just the basics, I think you will do better than the market averages. I think you, especially in this space, I think you can do that. Again, the book lays that out really well, the case for why that's true. What we really focus on is making sure that LPs that invest with us are truly aligned with what we're doing. And we try to fight really hard against saying yes to an LP that may want to invest with us if we feel like it's not a great alignment. And so we really tell our LPs like, hey, this needs to be long-term money. And so if it's money you're going to check on every month or every quarter or even every 6 months, this is not the right fund for you. There's really no reason to do that here. That's not how we measure it. That's not how we look at it. That's not how we look at any of the companies we're investing in. So it's a concentrated fund. Like right now, I think we have about 13 individual positions, and our highest conviction ideas get the highest weighting. So you look at our top 5 and you're way over 50% of the fund. Probably in the top 3 most of the time will be over 50% of the fund. And one way that I try to show, again, the fund was born organically out of people asking if they could invest in the same stocks I invest in. So this is at the time when we made the fund, it was the cleanest way for me to do that. But this is where my money is. Like, this is where Josh's personal money that I invest in the market on an ongoing basis, this is where it goes. I put it in the fund. And so I treat this account as my account that has some more zeros on it, because a lot of people that trust us and friends of ours have trusted, us with their money. And so I think we both view this as, this is our money and we want to make the best decisions we can with it. From a net worth perspective, I've probably got more of my net worth in this fund than anyone in the fund. That's probably the way it should be. And if the fund turns out really poorly, then Josh is going to be hurt the worst. And again, that's how it should be. The chef should eat his own cooking. So that's a little bit about the fund, but we really try to take the long-term view and we try to dig deep. I think Tom's background with the CFA, my background auditing public companies at Deloitte, I think we're both very comfortable digging into financial statements and talking to management about what we find there. And so hopefully that's somewhat of a bit of an advantage for us.
I also, and I think also a big advantage, and this is, not just all of your skills, Josh, but I got to say, like, the fact that Tom had that background working in IR is a huge deal. People might take that for granted in some respects because, we all know the industry and I have many good friends and colleagues that work in the space, but the amount of exposure, they're seeing the whole picture because they have to see how management thinks. They're seeing how the game, they're seeing, what needs to happen in order for them to succeed. So that's something that you just don't get unless you were really in it as an investor, like as a board member or really as a board member or some kind of officer in the company. Like that's just an experience.
Yeah, I had the advantage of, on the investor side, watching and talking to Tom in that and what he was doing in IR. And so it was, when I first met Tom and we talked for, gosh, I don't know a long time, years, I would say, before Tom came on.
Yeah.
And there was obviously from the early days, neither one of us had any inkling or intention of, he may come work with me and try to build this. So I got to understand and know how Tom thinks and how he works for a number of years before he joined. So that was really cool. And it felt like we've been working together forever because we kind of had been, just not at the same place.
Tom, wanna chime in there?
Yeah, you're saying too many nice things about me. It's making me uncomfortable. I appreciate it. And what I forgot to mention, kind of on the background with Josh, we had probably only met maybe once or twice in person, and we had just talked on the phone so many times, and traded ideas throughout the years while I was in IR, and then even after that. So when I did reach out to him, it was a pretty natural conversation. So thank you for saying all those nice things and bringing me on board.
Say some mean things if you want. But maybe that's a different.
Well, we don't have enough time.
Like Tom missed that one winner from 2020.
There's probably a lot more than that.
Most IR experience. You couldn't tell that manager was full of shit. I mean, come on, man.
Back to Robert's point, the IR world, I know that was big for me because I learned how investors ask questions, not just with microcaps, but small cap companies and even some mid caps in there as well. And you get to see both sides of the table. What questions are the buy side asking? How are management handling them in front of those investors? And then how are they talking about it behind the scenes? So you get to kind of see all of that. I think that helped train me on how to ask questions and how to kind of get a little bit more out of management without asking something you're not supposed to ask. That time when I was in IR was very beneficial. So I have fond memories of that. So and I actually met both of you there.
That's right.
It's pushed me to, I think before I started working as closely with Tom, I would tend to spend more time just digging into 10Ks and 10Qs and filings. And I would reach out to management. I think that's part of what we have to do and need to do and should do. But I think Tom has been really helpful in like, hey, we need to reach out to management again. We need to talk to management again. I'm like, it's probably a good idea. We do. And so I think it's been a really great, it's pushed me in a good way.
That's cool. Yeah, no, Tom, he just set me up for my next question that I'm gonna throw it back to him on this one. I asked, the best questions that investors, that you took from them. Also then let's get the other side of the coin. What were some of the worst questions that you heard investors ask that management, you just like, there was no point asking that question. Like you literally got nothing out of that. And also management now like is talking mad shit about you because they think you're an idiot. I've never asked that on here. I have to
question. Yeah. I can't wait to hear this.
Yeah. Hopefully I haven't. So I probably had two again. Hopefully I haven't been guilty of this, but when they don't quite understand what the company does because they haven't done the research behind it. I think that happens a lot at conferences, especially if you take a meeting sometimes last minute, you may not know the stories, that's fine. I've definitely been guilty of that, but either silly things like asking companies to give guidance when they have publicly stated on conference calls many times that they do not give guidance. They tell you they don't, and then you ask the question in a different way to try to get them to, give you guidance that they're smarter than that. I think that creates a bad rapport with management teams. And one thing that's always, this might just be it's not a direct question, but I think Josh and I are similar in this, but with all the financial jargon that's out there, we like to kind of keep things very simple. So, you always have that person in the room that tries to ask the fancy question and throw out all of the fancy financial jargon and sound like they know what they're talking about. But at the end of the day, we're pretty direct, I think, with our questions, and try to keep it as simple as possible and not get too stuffy, I guess.
We're not fancy guys. Yeah.
I mean, yeah.
I mean, at the end of the day,
I wish I had a better answer.
No, I mean, look, at the end of the day, like in terms of like do's and don'ts with talking with management team, I think we can all agree that one, it definitely helps if you have some sort of knowledge about the company a little bit beforehand. Management is much more receptive to what you have to say and your questions, even if you can take some chances with your questions if you at least know a little bit more about the company, or at least faking it until you make it. And at the end of the day, just showing respect, right? Like you can't just be one of those, even whether you're a shareholder or not, or especially if you're a prospective shareholder, like, everyone's doing their best and trying to build a business, to the best of their own abilities, or at least we have to assume so. So we got to at least try and give that person the respect that they deserve before, we go in for the kill, for that type of question,
Yeah.
So. Right. We want them to take a meeting with us again. So I think time is like probably the best asset we all have. So I don't want to waste someone else's time with silly questions. I think I wouldn't want someone wasting mine. So we try to ask a question so that we can come back and ask them again. So
we want to
compare answers too.
Yeah, we want to be respectful of at least doing enough research to have thoughtful questions. And, if we don't, there's kind of no point. It is a waste of everyone's time.
Absolutely. So another question that I ask everybody on here that, I'm sure both of you have your own individual stories on here, and maybe we won't use maybe a company that's currently in the fund or in the portfolio. What would you say is an investing experience that you learned the most from, that guided you to where you're at right now and maybe, want to, grow towards? So Josh, you want me to come to you first on that?
Sure.
And feel free. You can name the company, not name the company. It's totally up to you.
Well, I won't name this one. I'm thinking of one that's in our fund. And maybe another podcast, we can kind of go in deep dive into a company. But early on, I was really more about look at historical financials, because that's what I knew. Like I put those together for companies. So I would look at historicals and assume, well, they've grown at 15, 20% a year. That's going to keep going, and I can model that out. And it was more about the quantitative stuff, which is really important. You have to know the quantitative factors of the business and where they've been to see kind of what the trajectory might be able to be, or at least what the levers are. And one company in particular, early on in the fund, we found a company that their business model was simply misunderstood what they were doing. And so I was randomly at an event, the CEO was speaking. It was not an investment conference. It was a very random event, but the CEO was speaking. I thought, wow, where they're going is not what the financials reflect, because the financials reflect the historical business, and that's not where they're going to make their money. They're making their money by pivoting a little bit, but focusing on a niche of what they were already doing. And that niche happened to be really profitable, and they happened to have a special insight to do this thing. And so learning that, and then talking more with why are you doing that? How will you do that? How can you execute that? And then watching them do it, like they actually executed, and they actually did exactly what they said they were trying to do. And, it became a very profitable position for us. And that one, I kind of got lucky, I think, on that, but it reinforced to me the qualitative part of the research, that you have to understand where they're going. And is that what they've been doing the past 5 or 10 years, or are we going somewhere new? And if we're going somewhere new, do we have conviction that they can actually pull that off? And why the heck are they doing that? And so I think that it just reinforced to me that the qualitative is as important as the quantitative, and you really got to know both. You can't, in my opinion, to be a great investor, you can't just know one or the other. You got to have both, and you got to understand how they work together.
Very cool. That's a great example right there. Tom, you got one?
Yeah, similar story. Not inside the fund, but in the past, I had always invested in things that in my own personal portfolio that I understood. The numbers maybe made sense, but looking back on it later on when the investment didn't pan out, it was always because the management team wasn't, the best. And so I started to learn that instead of just investing in things I understood where maybe the numbers made sense, there's an old Warren Buffett quote about that, but you really need to have good management, preferably great management. And so I started looking more at those qualitative issues in what I was investing in. And so I invested outside of my normal comfort zone a few years ago. Someone I knew on the board of a company, and it wasn't a space I typically invest in or understand for that matter. And I'm talking about a different sector. But I knew someone on the board, and so I knew the management team, got to know them a bit, had phone calls with them, and decided to kind of make my investment solely based on that. It was a kind of a reverse merger situation, and waited a few years, and sure enough, management did what they said they were going to do, and the stock took off, and I did well on that one. So I don't own it anymore. I wasn't in the fund. This is long before I knew Josh, but it was a lesson I think that I needed to learn, and that it's definitely both. It can't be one or the other. But if I had to choose, I would probably choose better management over just a good business with bad management, because you can always change the direction of the company.
That's interesting, because that's why we're such a great team, Tom. I mean, because I would say the opposite. I would say that the business has to be able to be run by idiots, because eventually, like, that's a Buffett quote too, because eventually one will run it. And so
That's true.
I want to find a company that almost anyone could run, because it's in such a great space. It's got such great tailwinds. It's got such a niche, whatever that thing may be. And so, I think that's helpful. I'm glad, honestly, we don't both think that exact same thing there. I think that's healthy.
I think we're on the same page, probably too often. So maybe this is
good.
We think similarly.
That's good. Yeah.
Sometimes. We just need to find one of those good companies that can be run by an idiot, and then we'll go get management from somewhere else to join on. So,
yeah, exactly.
That's all we got to do.
I was going to rename this podcast, Planet MicroCap Therapy Sessions. I think this was, I think you guys broke some serious ground just now.
We did. That was deep.
It was very deep. You guys gave us a full picture here. I think this was pretty cool. I know we have some ideas for some other episodes that we're going to do together down the road, once they come to fruition. I think this is probably a good place to end it. To close this out, what advice would you have for new investors that are looking at microcaps right now here on March 20th, Monday, 2023? Tom, let's go to you.
Go first.
Yeah, I was going to say, Tom, go first, and Josh will close it.
You cut off, or just are these new investors that are just getting into microcap space, or?
Yeah, new investors, maybe passively looking at it.
I would say just start reading, whether that's books that cover the investing space, or really just start digging into 10Qs and 10Ks and start reading as much as you can from management. Maybe listening to earnings calls. Not all of microcap companies do earnings calls. Most of them probably don't. Just get acquainted with the space. You're probably not going to find much sell side research, which is good. Maybe not the best when you're trying to learn, but it's good to find those companies before everybody else does. So it sounds super generic, but just start reading, and maybe do a paper portfolio and start tracking some of the names you're interested in before you dive into the space. Trading in microcaps obviously can be a little tricky from a liquidity standpoint. So yeah, maybe follow along on paper for a little bit and see if it's for you.
I'd say that you gotta first get rid of any FOMO you have and realize that this is, as Buffett says, a no called strike game. Like, you don't have to swing at every pitch, and you shouldn't. And if you have that feeling of like, oh my gosh, I'm going to miss this, I need to hurry up and buy it, that's probably a good indication you should pump the brakes a little bit and learn a little more. And so I think you never need to go all in to a company, especially if you're first getting started. I think you've got usually time to slowly get into the space. And Tom's just piggybacking on what he said about trading and with liquidity. There can be decent bid-ask spreads on microcaps. And so if you're looking for that quick trade to get in and out, you could be severely disappointed because just the spread alone, if you're not patient, can hurt you. And so I would just say you need to understand what you're investing in. You need to have a thesis. And I would say if you're really interested in learning, document your thesis. Like, document why you liked a company, buy the company, or slowly get into the company. And if you change your mind, write that down and date stamp it so you can actually see your thought process of like, what changed? Why did I like this? I think that's really helpful, just to see that progression.
I love it. I think that's all great advice across the board. Now, before I let you go, Josh, I have to ask, what is the stack of, is that the Psychology of Money behind you? You have like a bunch of copies on the left.
Oh, that is yeah. Shout out Morgan Housel. That's one of my all-time favorite books to give to people about money. It is so good and it's so entertaining, and it's an easy, quick read, but it breaks down really important key financial concepts in a way that's really fun and can be easily understood. So one of my all-time favorite books. Yeah.
So that's why it's number one on Amazon. You're literally just buying up all the inventory.
Dude, I've bought hundreds of copies of that thing to give away. So
nice.
Yeah. And I'm a fan of Morgan. I think he's a great thinker and a great writer. So
100%. Yeah. Very cool, guys. All right. Well, with that, it's time to let you go. Where can folks go and find more information on Womack Capital Partners?
WomackCapitalPartners.com. And you can find me on Twitter, Josh Womack, and yeah, reach out if you've got questions.
You have a newsletter too. What's the newsletter called again?
Capital Sense. Man, I'm glad you said that. Yeah, Capital Sense. It's a Substack newsletter. Appreciate that.
Love it. Of course. Well, Josh, Tom, thank you guys so much for joining me here today. Really do appreciate it. Good luck. Stay safe. And I look forward to the next time we have a conversation on here. This is a lot of fun.
I appreciate you, Robert.
Definitely.
Thanks.
Thank you, Robert.
Talk to you later.
This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.